if you play the volatility, I mean, we've got a decent correction starting any day now in equity markets. That will take, for instance, the S&P down to about 5,000. But then we can see by 2028, again in a very volatile manner, S&P around 8.5, or even higher. So again, this is not a time to make long-term investments. It is a time to trade.
Yeah, it's really interesting to hear. And what impact do you think this has on other assets? I think commodities, precious metals, bonds.
Well, they follow that volatility. I mean, for all the talk about copper used in data centers and in green economy, which is going to fall by the wayside, I think it's the big driver behind copper consumption is global growth. So for copper, I think we're going to have starting later this year, a nice increase in copper consumption and a 4% increase next year, 26, and maybe 3% in 2027, and that will give you a nice tight market. So we have a decent correction in copper prices until the third quarter, and that's the start of a 2 to 3 year bull market. But it's not a time to invest long term, for the reasons I gave earlier.
Yeah, and then I'm guessing that's the same for, as you say, gold and bonds.
No, gold follows a different route, because gold is being seen as the preserver of value. Most currencies are fiat currencies and will remain so. So your gold buying is less retail buying and more institutional and central bank buying. So I think every dip in the gold price, you buy. And I think eventually, gold will be the base behind the BRICS currency.